Good evening, everyone. Tonight I will be discussing today about the monetary policy here in the Philippines. The objectives are number one, to know the definition of monetary policy here in the Philippines, how does it apply? Two, to be able to understand the functionality of monetary policy. And three, to know about the types of Philippines monetary policy and how often does monetary policy change. So what do you think have the power or authority in governing the Philippines monetary policy? Who, what, or who is? The answer is the Bangko Sentral ng Pilipinas have the power or authority in governing the Philippines monetary policy. How monetary policy works? The Bangko Sentral ng Pilipinas is the central bank of the Republic of the Philippines. It was established on the 3rd of July 1993 pursuant to the provisions of the 1987 Philippine Constitution and the new Central Bank Act of 1993. The BSP took over from the Central Bank of the Philippines, which was established on the 3rd of January 1949 as the country's central monetary authority. The BSP enjoys fiscal and administrative autonomy from the national government in the pursuit of its mandated responsibilities. So, what is the primary objectives of BSP? So the primary objective of BSP is to maintain price stability, conducive to a balanced and sustainable growth of the economy and employment. Because nowadays we're having problems in our economy due to the pandemic. So a lot of unemployment rate increases now, and the oil prices also increases. Last month, um, or last 2 months, and then how does the prices increases affects the monetary? As we know, the objectives of monetary is to maintain the price stability. But for that happens, increases the prices of oil, prices of or rice. So it was not maintain the stability of the price. It wasn't balanced because of that situations. No. But the aim of the PSP is to have the balance and sustainable growth of the economy. So, what is the monetary policy? The monetary policy is the collective act or actions of a central bank, currency, board, or other regulatory committee that determine the size and the rate of growth of the money, which in turn affects interest rate. Monetary policy is maintained through actions such as increasing the interest rate and or changing the amount of money basket to keep in the vault or bank reserve. So, so the goal of the monetary policy is to increase the rate and the amount of money needs to keep in the vault. As we discussed, or as I said a while ago, the primary objective of this monetary policy is to promote a low and stable inflation conducive to balanced and sustainable economic growth. And because of what happens previous 2 years, we're having problems on the pandemic. So the BSP will not, cannot hold the sustainability of our monetary because of that have problem. No, but adoption of inflation triggering framework for monetary policy in January 2000 is aimed at achieving this objective. So actions by the BSP. What is a monetary policy? So the monetary policy to manage the supply and cost of money and credit. So that the first um, job of the monetary policy is to manage the supply and cost of money and credit. It means that it is to control, or it means that it is to facilitate about the supply and cost of money. And second, to influence overall demand for goods and services. So it is important that the monetary policy will influence the demand for goods and services to increase our economy and third, to attain price stability. Even we're in the midst of the crisis, still to attain price stability. But unfortunately, it was not because, as we observed 2 months back, that the prices of the oil are increases. It reaches 290 per liter, and then the rice per kilo also increases. So it was not attained the price stability. But still, the monetary policy is there, driven by the BSP in the midst of a pandemic. They worked out so that the Filipinos nowadays will will be stand from the previous problems, uh, previous endeavors, hardships to gain to have a better stability prices. No? So the BSP approach to monetary policy is the inflation targeting. This has a focus mainly on achieving a low and stable inflation, supportive of the economic growth objectives. This approach entails the announcement of explicit inflation target that the BSP promises to achieve over a given period of time. So it was given a period of time that there is an objectives about the inflation target that should be the BSP meet so that to achieve the low and stable inflation and to support the economy's growth objectives. So that's one thing aim of our president now to sustain the stability of price, to sustain our economic growth, and, and to lessen the unemployment. But on contrary, because of the plan by the government to resizing of the employees, it also affects the value of the monetary policy. So is the chief responsible for the implementation of our monetary policy embodied in the Section 2 articles of Amended Republic Act 265? The answer is the BSP. The Central Bank of the Philippines is the chief responsible for the implementation of our monetary policy and is the sole authority on money matters as embodied in the Section 2 articles of the Amended Republic Act 265 because it regulates the circulation of money. It controls the regulations of money to help trade and industry meet their needs. It is the only agency which can issue money in the Philippines and it is responsible for maintaining the stability of peso so it will always be accepted within and outside the country as a medium of exchange. Easing monetary policy, the central bank reduces interest rates so that there is more borrowing. That's one of the strategy of the central bank. Because to lower the interest rates, they believe there is more borrowing, the demand rises, and the GDP will increase as well. What are the two types of monetary policy in the Philippines? First, contractionary policy. Second, expansionary policy. So what is a contractionary policy all about? When there is too much money in the economy supporting overall demand of goods and services, which in turn increases inflationary pressure, the BSP tightens the process to reduce the money supply. This action dampens demand, which could lead to lower inflation. Higher interest rate, less lending, borrowing, more savings, and less spending. So to avoid or to tighten and to reduce the money supply, it should the contrary policy will take effects. We can think of a monetary policy as the faucet. This is the person who controls the faucet, and the water is the supply of money in the economy. Because if it will not tightens the supply of money, our economy will go down. So the BSP will control the supply of money to which to decrease the inflation ratios. And about expansionary, when there is too little money in the economy which dampens overall demand for goods and services, the BSP loses supposed to expand money supply. So if there is little money, so the BSP will loosen the expand the money supply. So it means that the BSP will dispose or yung magpalabas ng money, ng maraming supply ng money because the economy which dampens overall demand for goods and services due to the expansionary. It lowered the interest rates, more lending, borrowing, less savings, more spending. Both are very necessary in the monetary policy, but it depends upon on our economy. It depends upon the situations. So when it will take effects, or when which will be the one to be if take effect, is it contractionary or the expansionary? It is a case-to-case basis. Depends upon the situations in our economy. The Philippine economic and financial landscape has greatly shaped the evolution of the country's central bank in the last 70 years. The better respond to these challenges, the conduct of central banking had also evolved through the adoption of different monetary policy frameworks, economic and financial challenges or conditions, central bank's charter, central bank's broad policy objectives, central bank's monetary policy framework. The BSP monetary policy over the years, its policy directions from 1940s, rehabilitation efforts after the war. In 1950s, safeguarding initial growth efforts through exchange rate and trade controls. In 1960s, heading toward a more market-determined exchange rate through the control of the Philippine peso. In 1970s, stabilizing the economy on a sounder footing by managing the country's level of liquidity, foreign reserves, and domestic and foreign debt. In 1980s, navigating through turbulent times by currency stabilization and financial reforms. In 1990s, gaining policy independence essential to the achievement of long-run price stability objectives. In 2000, up to present, moving towards inflation targeting to focus mainly on price stability as a primary objective of monetary policy. But because of the pandemic, the inflation of the prices, the increases of the commodity prices, and these objectives of stabilizing the price not take effect. Yeah. So the risk-free approach to monetary policy and inflation targeting is focused mainly on achieving a low and stable inflation supportive of the economy's growth objective. This approach entails the announcement of the explicit inflation target that the BSP promises to achieve over any given time period. So for this year, the BSP is aiming to double the losses incurred last year because of the pandemic. So the with the government aiming now to increase the double to regain the value of the money, to stabilize the price, to lower the prices of the commodities. It helps the economy grow as well the people. The more um the more money supplies or we call the economy or the increase or the increase of the interest rates will help to boost our GDP. It helps to boost our economy. To stabilize the prices, it also helps it helps our economy. So the monetary approach is targeting the inflation because their main objective is to lower and to have a stable. So what are the monetary tools of the Bangko Sentral ng Pilipinas? One, open market operations. So this consists of buying and selling of government bonds. These activities are undertaken to accomplish the objectives of the national monetary policy. So this is buying and selling of government bonds. The open market operations are almost the sale of or the sale or purchase of government securities by that these people would withdraw liquidity from or inject liquidity into the system. Open market operations are a key component of monetary policy implementation. This consists of repurchase and reverse repurchase transaction, outright transactions, and foreign exchange swaps. Repurchase and reverse repurchase transactions are carried out through the repurchase facility and the reverse repurchase facility of the BSP. In a repurchase or rep transaction, the BSP buys government securities from bank with a commitment to sell it back at a specified future date and a predetermined rate. The BSP payment to the bank increases the latter's reserve balances and has an expansionary effect on liquidity. Conversely, in a reverse repo, the BSP acts as the seller of government securities, and the bank's payment has a contractionary effect on liquidity. Our repurchase or RP and RRP reverse repurchase transactions have maturities ranging from overnight as well as 2 weeks to 1 month. The interest rates for the overnight reverse repurchase and repurchase facility signal the monetary policy stands and serve as the BSP primary monetary policy instruments. So reserve requirements, the imposition of reserve requirements are mainly for the protection of depositors. That is to assure the individual banks will not attempt to extend credit beyond their capacity if there is an excessive withdrawal. So this is to control the capacity of the credit so that it will not go beyond their limit. Acceptance of fixed terms deposit. The BSP also accept deposits from banks, the special deposit accounts. The study consists of fixed term deposits by banks and by trust entities of banks and non-banks financial institutions with the BSP. It was introduced in November 1998 to enable the BSP to expand its toolkit in liquidity management. So the purpose here in November 1998 is to enable the BSP to expand the toolkit in liquidity. So it's the facility by allowing trust entities to deposit in the special deposit accounts facility in order to better manage liquidity in the face of strong foreign exchange inflows. In order to better manage liquidity. So these are money instruments employed by the BSP as a tool to map up excess liquidity in the market. Excess funds can lead to inflation in a sense. The BSP primary mandate is to control inflation in the country. The agencies utilize several tools to help achieve this goal, especially deposit accounts are one of these liquidity management tools. To motivate retail and institutional investors to invest in SDA, special deposit accounts, the BSP offers interest rates relatively higher than the rates offered by the regular savings and time deposit accounts. Placements are also backed by the BSP, the agency in charge of printing that counters currency, so there is very low risk of default. Third, the discount rate. One of the functions of the BSP is to act as the lender of last resort. Banks needing reserves can borrow from BSP. The interest rate that the BSP charges on the decimal is called the discount rate. So all of the banks in the Philippines are borrowing money to the BSP. The BSP standard discounts loans and advances to banking institutions in order to influence the volume of trading in the financial system. Rediscounting is a standing credit facility provided by the BSP to help banks meet liquidity needs by refinancing the loans to the extent of their clients. The rediscounting facility allows the financial institution to borrow other loan papers of its borrowers as collateral. There are two types of rediscounting facility available to qualify the banks. The passive rediscounting facility and exporters dollar onion rediscounting facility EDYRF, which was introduced in 1995. Buying and selling of foreign exchange. The BSP may buy and sell foreign exchange at all times to maintain the international stability and convertibility of the Philippine peso to promote the domestic investment of bank resources. So it is selling and buying foreign exchange. Selective credit, the BSP will ensure that the supply of available and cost of money shall accord the needs of the Philippine economy, and that credit will not be granted for speculative purposes that do not conform to the national interests. The foreign exchange swaps refer to the transaction involving the actual exchange of two currencies. Like for example, peso to dollar or peso to euro on a specified date and rate occurred on the rate date, and the reverse exchange of the same two currencies at the date further in the future at a rate agreed on the date. The agreement consists of the swapping principal and interest payments on a loan made in one currency for principal and interest payments of a loan of equal value in another currency. For foreign exchange swaps, for your example, so how much euro of 1 peso exchange to euro, 1 euro? I think approximately 57. Monetary and fiscal policies. While fiscal policy deals with government spending in relation to different economic circumstances in the market, monetary policy deals with the very creation and availability of money. These two policies interplay to regain control over excess or lack of different economic activities like spending, producing service, and loaning. So the monetary and fiscal policies are the two main um, key that control the spending and producing savings loaning of the in the economy. Because if there is no monetary and fiscal policies, the economy will be having problems. So it's good to have monetary and fiscal policies will govern so that it will control over the excess area of different economic activities. So the fiscal policy refers to the government actions that affect the total government spending activities, tax rates or tax revenues, or the government budget deficit. It is an instrument which can push the economy towards equilibrium when there are the destabilizing elements operating the economy. So the fiscal policy focuses mostly on tax rates in the government, tax revenues, the government budget deficit. So the two types of fiscal policies are automatic stabilizers, the government spending or taxation actions that take place without any deliberate government control and that tend automatically dampen the business cycle. So kung walang control yung government natin, so ano mangyari? It dampen the business cycle. Masasira. So it needs to have the control by the government to stabilize, especially on government spending or on the taxation. Examples, personal income tax collections fall during recession as wages drop and people lose their jobs. Thus, during recession, uh, government spending automatically rises and tax collections fall. What if the economy is in full or near full employment, government spending falls and tax collection rises over inflation? Because of too much too much spending, yung pagkolekta, yung collections ng tax, bababa. So what should be the best? So because of the pandemic, there is recession, so the government spending too much for the COVID supplies in our countries. So the collections of tax also fall because no businesses of that time back 2 years back 2 years, no? Because of the pandemic. And some businesses establishment are closed. So the collections of tax decreases because only the tax nag nag bigay ng buhay sa government. So while the economy is in full or near full employment, government spending pools and the tax collection rise up with inflation. So kung continuing yung spending sa government, ang tax collection natin is maganda kasi yung control. Na-control yung mga control yung mga gastusin. Gawa ng, for example, marami ng employment, okay na yung businesses, nag-regain na, back to normal na from the pandemic. So expectations is the collections of tax rises. Discretionary fiscal policies. Discretionary fiscal policies are government spending and taxation actions that have been deliberately taken to achieve specific macroeconomic goals. So this is focused on macroeconomic goals. So mga negosyante na malaki. Na yung ganito is, yung merong specified na target na dun lang dapat ang pag-spend sa government, taxation, para walang masayang. Example of the economy is headed to a recession. The government can make this decision to cut taxes to maintain purchasing power. So, ito yung nangyari back nung pandemic tayo. Yung recession, ang ekonomiya natin. So, ang government, ang decision niya is dapat i-cut yung taxes, maintain purchasing, para to maintain purchasing power. Does this happen? Did they cut the taxes on the time of the pandemic? No, it was not. So, andun yun, naghihirap pa rin. Nawala na yung purchasing power. Kasi hindi nag-decrease yung taxes ng time ng pandemic. Instead, so the fiscal policy types, objectives, and tools, the expansionary fiscal policy, if we took a look versus the contractionary fiscal policy, the government spending higher spending by the government, the taxes lower. If the government spending is lower, the taxes increases or higher. It means that it is better, less contractionary because taxes is higher. It helps our economy. More taxes, it helps our economy. Three major functions of fiscal policy. Allocation function. It is the process by which total resources are divided between private and social goods and by which the mix of social goods is chosen. Distribution function. Adjustment of income and wealth to assure conformance with what society considers as fair and just distribution. Stabilization function. The use of budget policy to maintain high employment, price level stability, and economic growth. So these three major functions of fiscal policy must be observed. So what are the three components of fiscal policy? What are those? As I discussed previously, one is the taxation. So government by three, government spending. So what is taxation? So ito yung buwis natin. Ito yung buwis. Ito yung nagbuhay sa government, sa ekonomiya natin. Government borrowing, ay yung hiram, maghiram doon. Or maghiram yung, mahiram tayo sa gobyerno. Tapos yung, ang gobyerno natin maghiram sa ibang bansa or maghiram sa BSP. Gano'n. Like for example, nung back ni President Duterte, he borrowed around 200 million pesos, but before the end of his term, he paid because of his build program. But it helps a lot for us Filipino having that program because it increases the employment even in the midst of the pandemic. So government spending because of the pandemic, I think it increases due to the COVID supplies. The mask, no, the surgery, we use the official the controversy before that the government spending too much. It affects our economy and affects our monetary because they did not control the volume or the amount or the price. So different. So the monetary policy or the fiscal policy was not to effect in the pandemic times. So how often does monetary policy change? The Federal Open Market Committee of Federal Reserve meets 8 times a year to determine changes to the nation's monetary policies. The Federal Reserve may also act in an emergency as was evident during the 2007-2008 economic crisis and the COVID-19 pandemic. So after every 8 years sila mag-emit, mag-change ang monetary policies, international or even local in our country. Also, the Federal Open Market, 8 years. So for a preview, so what is monetary policy? It is all about the stabilizations of price, lowering, then yung about employment, then yeah, control. So thank you so much. Hope you learned from my report. Once again, good evening.